Hello traders, Corey Mitchell here with your swing trading stock market outlook for the week of November 13th. Each week I go through the same process of looking at a few different things, major indices, market health indicators, recent watch list and trade performance, sector performance, and that helps me decide how aggressive I'm going to be in deploying my capital. So heading into the week of November 13th, market conditions are still mixed but improving, and a lot of our major health indicators have turned favorable, while still a couple aren't quite there yet. So that means I'm willing to deploy some capital, but not all. You want to save those times where you're fully invested for when things are really good, and we're pretty close, but not quite there yet. You can see some of the stocks that I'm watching, the best swing trading stocks list for November. That'll probably be getting updated in a few days. I updated that at the beginning of the month. That is just stocks that have a lot of recent momentum, either to the upside or downside. The current stock watch list, includes stocks that are close to forming actual trade setups, rounded bottoms, earnings plays. What else do we have in there? Contraction patterns. So those are getting close or have already triggered setups. And then if you just want some other ideas, you can check out the best performing ETFs and best performing stocks. Obviously, those have had some upside movement. And while the indices were declining, a lot of stocks went on sale. So you can check out the best buy the dip stock list, buy and hold stock list, and best long-term dividend stocks. So I look at 4 different indices from the U.S. You can see what they are here: technology stocks, U.S. large cap, NYSE, a very wide array of industries and companies of different sizes, and the Russell 2000, which is smaller companies. And then I also have thrown on the TSX Composite, which is the Canadian index, and then we have Bitcoin over here. So from a price action perspective, if we look at the NASDAQ, it has made a higher swing high above the October highs. Just barely at this point. Ideally, we want to see that continue to run. If it reverses lower right here, it's a little more suspect, but still, that is a favorable sign. Downtrends are lower swing highs, lower swing lows. One of the most simple concepts you can have, yet it forms the foundation of all my swing trading, day trading. And you can see we've started to make that turn. So this is the first time that we're starting to see this during this pullback, that we're making higher swing highs, which is favorable. That is no longer a definitive downtrend, right? That is a uptrending behavior. Uptrend is higher swing highs, higher swing lows. So we've seen our first sign of a potential uptrend in the S&P 500 and the NASDAQ 100. We have not seen it in the NYSE Composite and the Russell 2000. We're still quite a bit below those October highs. The TSX did it as well. It moved above this major swing high here. So we have some indices saying, yeah, we're potentially moving up. Technology stocks, major large cap stocks, and these indices, which generally have more smaller companies, are not quite there yet. So we'll see. So it's a mixed bag. That's another reason why I'm not willing to deploy all my capital. I prefer seeing all the indices moving up. That shows that pretty much no matter what stock you're trading, the rising tide is likely going to lift the boat. Whereas right now, it's fairly selective on whether a stock's going to pop or not. If you were invested in small caps last week, maybe they didn't do so well, whereas if you were invested in, a big cap stock or a technology stock, you might have fared okay the last few days. Bitcoin broke out of this big range. We've been talking about this one for weeks, and it stalled out and then had another run. Overall, very good shape for Bitcoin. The S&P reached a maximum decline of about 11% from this high when we dropped down here to the low point before this recent rally. So that is a highly common pullback. One of our health indicators, which we'll talk about in just a second, was actually showing that this was not a major or likely a major sell-off or downtrend. It was more just a common pullback type situation. So let's look at the market health indicators. This is the S&P 500. First thing we notice is that back here several days ago we had a follow-through day on, it was on the NASDAQ 100 index. Almost did it on the S&P 500 as well, but just not quite. But overall, a bullish signal right here when we had this really strong movement up here. And you can see that big thrust on this indicator, which is, let's talk about it first. So this is daily average movement. And way down at the bottom here, I have minus 2%. Minus 2% down days on the S&P 500 are a big warning sign whenever they happen. It means big selling came in that day, and it's usually best to stay away for at least a few days to see what happens. We have not had any 2% down days since March, and we got close. We had several days that were right around the 2% mark. You can see back in late 2022, a whole flurry of them. This was still as that kind of downtrend was working itself out, and we were starting to move to the upside. So uptrending behavior is marked by much lower volatility. It doesn't show as much on this chart, but you can see late 2022, just these big swings in daily movement, and then we've started to level off, right? Especially during this period when we had this big, nice long up move from June through August. You can see volatility just really dies down. And then during the decline, it's increased a little bit, but we haven't had any 2% down days. When we get those 2% down days, that usually indicates we're in a more severe selling situation. It stayed pretty calm throughout this entire decline, so that was a sign that this was more of just a normal pullback, not a likely to be a big, deep bear market. But at the same time, we can't put too much stock in it because on any given day, we could have had a big drop. So this indicator is always just kind of, as long as it's good, it's good. But of course, on any single day, it could turn not so good. But we did have these big upward pushes, which we hadn't seen in quite a while, and that was nice to see coming off this low, show some good buying enthusiasm. So let's go. So that was the ROC, I call it, a rate of change. That's the daily average movement, not daily average, the daily percentage movement of the S&P 500. This is how many stocks are above their 50-day moving average. You can see we're right on near that 50 mark. So what this basically means is that I have two up here. The red one is S&P 500 stocks, and the turquoise bluish one is all U.S. stocks. So this means 49% or 48.7% of S&P 500 stocks are above their 50-day moving average. So it has nothing to do with the actual S&P 500 index. It has to do with the stocks inside the index. And ideally, when more than half of stocks are above their 50-day moving average and in short-term uptrends, there's nothing magical about a 50-day moving average, but it is a crude measure of whether a stock's rising overall. So when we have more stocks above their 50-day moving average, more than 50%, if you think of trading just kind of randomly, it's going to make it easier to make money, because pretty much if you buy any random stock, you have more than a 50% chance of those stocks moving up. Whereas when it's below here, the odds are a little bit against you. So I prefer when this indicator to be going long when this indicator is above 50. It is right on the cusp and everything else is favorable. So I'm willing to deploy some capital, but this is just one of those other things like we talked about with the price action. All the indices aren't moving up at the moment, and this indicator is just kind of hanging out at a mediocre level. So there's no reason to deploy all my capital and think everything's going to surge higher. We'll have time. If everything keeps improving, we can take a couple trades now, and then if things keep improving, we can take a couple more, and that's how we deploy our capital. I'm not going to rush in right now. So this is still on the cusp. Gave it a little, kind of nonchalant face there. And volume, not super important at the moment. We talked about the rate of change. Advanced decline line, this could actually be a little meh face as well. So it moved above its prior swing high in October before the S&P. That was like back here. This moved above its prior swing high. That indicated the S&P, with its pretty high probability, would move above the October swing high. It has done that now, but the NYSE Advanced Decline Line is now moving down a little bit while the S&P 500 moved up and the NASDAQ 100 moved up. So this is probably more neutral right now. This was favorable. We're getting that favorable move, and at the moment it's not really following along. So this one's just kind of okay. I kept it at smiley face right now because it's not really hurting us, but it's not great either. And this one is up volume divided by total volume. It's the total volume that occurred in stocks that moved higher on the day compared to total volume of all stocks. And we had what's called a Lowry upside day earlier in November. We had 2 back-to-back days where more than 80% of the volume was in stocks that moved higher on the day. Very favorable sign. That occurred right around this area too when we had this strong surge. Just shows lots of buying enthusiasm coming in when you have that much of an extreme where so much volume was in the up moving stocks. So overall indicators, health indicators, pretty good shape. And we have some of the price action signals that are indicating this downtrend or this pullback could be over, but it's still a little mixed in our signals we're getting. The ultimate indicator is how many quality setups there are and how trades are working. There are quite a few setups out there. I've had no problem finding stocks that I like the look of. Have not had many that I've actually taken trades in yet or that I've triggered with a setup that I like. We still have to look in those individual stocks for risk rewards we like, things like that. But at least those stocks on the list on average are holding up quite well. So it's favorable at the moment, and so that's a good sign as well. And as long as we can keep finding lots of setups that don't just fly to the downside but that are actually working their way higher, that's a good sign. Gives me more confidence to deploy some capital. Main sectors to watch: technology, consumer cyclical, financial. These are mostly based on the last week and the last month because we've had a week or a bit more of since we started making this turn to the upside, so I'm mostly focusing on that. Everything was pretty abysmal over the last 3 months as we've had this decline that we've been going on since August. Technology, the only one that was holding up well. We also see technology here, second best performer over the last month and top performer over the last week. So technology is definitely one we want to watch. Communication services maybe, but it's a little bit lower on all these other ones. Consumer cyclical holding in the middle here, and same with financial over the last month, and they're kind of in the middle here over the last week. So some of the better performers, you could say, also over the last 3 months, they're near the top. So technology, probably one of the better ones, and then consumer cyclical, financial, I would throw in there. Again, you don't need to look at specific sectors per se. When you run your scan for top performing stocks, the scan list is generally going to gravitate toward, well, of course, stocks that have been performing very well, and a lot of those are going to be from the sectors that are performing very well. The only reason I include this is that if you're really pressed for scanning time and you don't have time to look through the maybe 100 stocks that come up on your scan list and you want to narrow it down, maybe you just look at technology and then you end up with 30 stocks to look at or something like that. So it's just a way to narrow down the list, but typically if you're running a scan for really strong stocks, you are going to find they're in the stronger sectors anyway. So what I'm doing right now, I'm willing to deploy some capital and get involved up to about 30 to 50%. That doesn't mean this week. That just means like overall capital for swing trading capital. And of course, that's going to depend on how many trade setups I see. There could be lots of trade setups out there, but if none of them trigger, maybe some of those stocks drop or they don't provide good risk rewards, I may not end up taking any. But I'm willing to deploy up to that if I get good trade setups in the individual stocks. The overall conditions are okay, but we still need the actual trades that we're taking to be quality setups in the individual stocks. I also day trade the Euro USD, day trade stocks. That provides a little bit more consistency because most days you're going to find trades, whereas the swing trading is more pockets of activity where we have lots of trades for a month or two and then it kind of dies off as maybe market conditions are flat or choppy, and then we get back in when they're good. If you trade long and short, you'll have way more opportunities because you could have potentially been shorting the last couple months and making some money on that. And then, of course, passively investing. So I do have accounts where I do longer term stuff, and that's going on all the time as well. So there are things you can do to sort of supplement the income while swing trading's a little slow. There's always the day trading option or the longer term investing, either passive investing or actually actively looking for quality companies, which are some of these lists that I had mentioned up here, like the buy and hold stock list, long-term dividend stocks, things like that. So that's your outlook for the week of November 13th. Have a great trading week out there.